Hello, and welcome to the third and final Business Growth Solutions presentation. This presentation will provide you an overview of the Small Business Administration's 504 Loan Program. This series was developed by the Racine County Economic Development Corporation with the goal to inform our businesses, community leaders, and commercial lenders about the resources available to help small businesses grow. This presentation would not be possible without the support of our sponsor, Tri-City National Bank. For more than 55 years, Tri-City has been a bank focused on the needs of its customers and communities. As your hometown bank, they remain dedicated to helping families fulfill their financial dreams and businesses thrive. So when you're ready to grow, talk to the best. Talk to Tri-City National Bank. Before I provide you an overview of the SBA 504 loan program, let me give you a little background. RCEDC began in 1983 to serve as a bridge between business and government to facilitate business expansion projects that result in increased tax base and the creation of new jobs. RCEDC performs its mission through its professional staff working in business recruitment and business expansion, talent attraction, and small business lending. RCEDC was recognized by the SBA as a Certified Development Company, or CDC, in 1985. We are the only CDC headquartered in Southeast Wisconsin and one of the only two headquartered in all of Wisconsin. This certification allows RCEDC to provide SBA 504 direct loan program to Wisconsin businesses. Since 1985, we've administered over $600 million to more than 500 businesses. Initially, RCEDC provided SBA 504 loans only in Racine County. But with many areas in Wisconsin not served by a local CDC, SBA encouraged all CDCs to serve their entire home state. To accommodate this change, RCEDC established its small business lending arm under the trade name Business Lending Partners. So, what is the SBA 504 program and when should it be used? The SBA 504 loan program is perfectly situated to finance fixed assets such as buildings and equipment, as well as refinancing those assets. Rather than seeking a traditional loan that requires a higher down payment, the 504 loan program allows the business owner to preserve more cash for operating expenses. The business owner also enjoys a low interest rate for a period of 10 to 25 years. So, how does it work? All 504 loans consist of three parts: a bank loan. A financial institution provides 50% of the loan amount at the bank's rate. A CDC loan. An SBA-approved CDC provides 40% of the loan amount at a fixed interest rate for up to 25 years. A down payment. 10% down from the borrower is required, which allows the borrower to keep more cash on hand for startup or operating expenses. Special purpose buildings as well as startup businesses need to provide an additional 5%, or an additional 10% if the business is both a startup and the loan is used for a special purpose building. Let's walk through a typical example. JELLYSTONE Camp Resort in Caledonia has consistently reached capacity limits during prime camping months. The owners knew they must expand their facilities to meet the needs of regional campers. The owner and his commercial lender structured an expansion project using the 504 program from RCEDC. This was a large transaction, but with the use of the SBA 504 loan program, the owner enjoyed the benefits of the SBA's fixed low interest rates. With the construction project completed, campers have access to an additional 100 new campsites, 50 cabins, water park upgrades, and access to a 5-acre swimming feature. There are three key advantages to the SBA 504 program. The low down payment. Commercial loans typically require between 20 to 35% down payment. However, the SBA 504 program typically only requires 10%, allowing more liquidity to be retained for operating expenses and other financial obligations. The low fixed rate. The 2021 interest rates continue to amaze us, remaining historically low. Those rates are secured shortly after the SBA 504 loan closing and remain unchanged for the remaining life of the loan. The long term. A typical bank loan may offer terms of 5 to 10 years with variable interest rates. The SBA 504 program offers 10, 20, and 25-year options, depending on the purpose of the loan and the needs of the borrower. I'm happy to share that the SBA has issued an update to refinancing. Previously, 504 debt refinance was only available for complete refinancing of buildings and equipment or could be used on a limited basis as part of an expansion project. The amount of refinancing that can now be included with an expansion project has doubled. The new rules also allow for refinancing of federal guaranteed loans that were used for an eligible project. For example, businesses that used an SBA 7A loan to purchase equipment or real estate can now refinance that debt using the 504 program to enjoy a lower fixed interest rate. So as a business owner, how would you know if the SBA 504 program is right for you and whether or not you should apply? As a commercial lender, how do you begin to incorporate the 504 program into your toolkit? Leverage this program to meet the needs of your current businesses and to expand your current portfolio. It is easy. Contact the experts. All it takes is a phone call or an email. Contact me, Carolyn Engel, or one of our experienced loan officers, Wesley Walsh or Dylan Volz, for more information about the 504 program. This being the third and final presentation in the Business Growth Solutions series, we want to thank all of our sponsors for their support. Johnson Financial Group for sponsoring the Zero Loan Program presentation, Associated Bank for sponsoring the Community Loans and Grant presentation, and Tri-City National Bank for sponsoring this presentation about the SBA 504 loan program. For more information about BLP or any of the finance programs we offer, please visit blp504.org.